So now that we have learned about horizontal analysis and vertical analysis, let us move to the third way of analyzing a company, that is the ratio analysis. In fact, ratio analysis can be subdivided into various categories, and these categories are as follows. Number one, the activity related ratios. So activity ratios. Now what is activity ratios? Activity ratios essentially provides us a view on how the firm is utilizing its assets. So utilization of assets is primarily provided with the help of activity ratios. Now the second part is something called a liquidity ratios. Now liquidity ratios essentially are the ones which talk about the ability to pay expenses in the short term. So we are talking about immediate liquidity. So ability to pay in short term. So this is the key. This is liquidity ratios. Number three, which we have, is called as solvency ratios. Now if liquidity ratio is for the short term, now think about the long-term obligations which the company may have taken. So whether the company has the ability to pay this long-term debt or its obligations can be gauged by the solvency ratios. Number four categorization would be something like profitability ratios. Now profitability ratios essentially mean that how company is profitable, whether they are earning enough as compared to their sales. Are these companies making losses? So all of these things are under the operating profit or profitability ratios. So generally provides us with the profit measures. Now last but not the least, there are another kind of ratios which are very important as well. These are called as valuation ratios. However, when we are talking about accounting per se, we will not discuss valuation ratios. We are talking about only accounting or fundamental ratios from the financial statements point of view. So as of now, we will not discuss anything about the valuations. We'll primarily focus on these four ratios.